Welcome back everybody, your typical bull here, and today we're going to be talking about the Bollinger Bands. But before we get into it, please do remember to like, subscribe, and comment. Your support really helps the channel grow, and it is very much appreciated. Alright, so first of all, you're on Webull here. You click on our Indicators tab, right, and we're going to click Edit. What is a Bollinger Band, right? So, Bollinger Bands are volatility blends placed above and below a moving average, and that moving average is generally 20 at its default, and the bands are usually around 2. So basically, it's like a standard deviation on either side of this moving average. So what happens when price moves away from its moving average, right? It usually comes back. It's a mean reversion. So people use these Bollinger Bands. Let me get my pen out. As basically, you can think of them sort of like a rubber band almost. If price moves, if this is your band, price moves up to this upper part, it's generally going to move back down to this average, right? As a mean reversion sort of play, yeah? Okay. Same thing at the bottom side. If price moves down below this bottom side, it's generally going to snap back and reverse to this center band. Cool. So that's basically the idea of Bollinger Bands. As you can see here, we're looking at Tesla. Price gets to this lower band, and what's it do? It snaps back to this average. And then again here, price is to this upper band, and it snaps back. So another couple of things to note here, that as price volatility gets smaller, the bands get smaller. Price volatility swings get higher, look, the bands get larger, right? So I'm going to show you guys a real quick, nice, easy, simple way to trade these Bollinger Bands that works. So what you are looking for, price to either move to either side of these bands and close outside of it, right? So let's just find a spot where that happens. Right here, price comes up to the outside of this band, it closes outside of it. So that is when we're going to start watching. And the other indicators we're going to use for this are just a standard 14-day RSI, a stochastic set to 5, 3, and 3, and the MACD, which are basically my 3 go-to favorite indicators. So we're looking for price to move outside, close outside of the bands, and then we want it to come back and close back in. And if you remember from our past videos, this is a 3-candle reversal pattern, right? Alright, so we want our RSI to be in overbought territory for the upper side of the bands, and we want our stochastic also to be overbought. And on this candle here, we want to see that moving back down, and that happens in this. MACD does not have to be crossed bearish, but you want it to be moving in that direction, right? Okay, so all of those things are in a line. So what we want to do is we put in a sell order just below that candle, and then our stop losses would be just above that reversal. And obviously that doesn't get filled here. The next day you get an inside bar, it's not filled here. Next day you get an inside bar. If you get 3 days where this doesn't fill, you want to get out, right? See, this trade wouldn't fill because after like that second day when your order isn't filled, second, third day even, you would want to get out of that, right? So that would be a canceled order. Let's scroll through and see if we can find some other setups here. Here's one. Price closes outside of the bands and moves back into the bands, right? So sell orders just below this candle, stop losses here, and you want to target 2 times away. You want to make sure that you can get at least 2 times your risk before you get to this band here, right? Okay, so You want 2 times risk. And when this price moves to this middle band, so on this candle, when price moves to this middle band, you're going to move your stop losses to break even. So pretty simple. Get in here. Stop losses are here. When price touches here, you move your stop loss to break even, and you're targeting about 2 times your risk to get out. You're looking for bearish momentum, but not necessarily cross bearish, and you're looking for overbought conditions on these for your short trades. Okay. All right. So here's one, price closes. This is a long setup. Price closes outside of the bottom band. You're showing some bullish reversals here. You get a confirmation candle. RSI is moving up. Stochastic's moving up. You can get to 2 times risk before you get to your upper band. Right? Price moves to the middle band. Stop losses go to break even. And then you'd probably, let's just scroll a bit. I don't think you get stopped out there, and then you would hit those 2 times targets here. Right? So it's fairly simple. See, if you notice here, price does close outside of the bands. But if you entered that trade, you would lose. But if you also look here, your RSI is not quite in oversold territory. So we're looking for mean reversion plays on this, right? Price moves away from the moving average, price moves back to it, price moves away from the moving average, price moves back to it. Kind of like a rubber band, if you'd say. Here you go. This is a very valid 3-candle reversal pattern. Confirmation candle. When you have large candles like this, I would put my stop loss below this part of it. But let's just zoom out just a touch here. RSI is oversold. But if you notice here, oh, sorry, didn't mean to click that. On your MACD, you're showing some very, very bullish momentum on your MACD, right? It's not hooking down like really. That's really bullish momentum on the MACD there. But you could argue that that is hooking down at this candle, which, you know, sometimes you are going to lose trades with the setup, so it is important to manage your risk and take stop losses, right? And if you are watching the markets, here's a good one. Like if you're watching the markets and the markets are up, generally you want to lean more towards the long side, right? So if you're trading with your markets, you're going to increase your probability. So if the markets are up and the sector's up, you want to take only the bottom band plays. If the markets are down, the sectors are down, take only the top band plays. So, and if you take both of them, you can expect that the ones you're trading against the market, the counter trend trades, are going to lose more often than the ones that are trading with the market, right? So I do hope this has helped you guys and given you a little bit more insight into how Bollinger Bands work. Please like, subscribe, and comment, and we will see you in the next video. All right, cheers. Oh.